All right, let's take the discussion forward with Amisha. Amisha, good afternoon. Last few days have been pretty rocky as far as the broader markets are concerned. Talk to us about which other areas your clients have been nibbling and you've been recommending them to buy.
So I think, after a very long time, the correction looks a little broad-based. And correction seems to have just started. So I think that this phase of volatility and a little more correction will continue for a couple of months at least. But in the meantime, we are continuing to have our view intact as far as BFSI is concerned, and as far as capital goods is concerned, our weak outlook on consumer continues to be intact. As also, we think that within BFSI, segments like life insurance or insurance will come back, and selective pharma also will come back.
Right. Amisha, hi, afternoon. Good to have you on the show. And what really struck us was your opinion about broader markets. Why do you think that the correction has just begun and it has more legs to go?
I think, for quite some time, the sentiment was very intact and the correction was shallow, and this was not so broad-based. If you see what happened in last 1 week or 10 days, was a very broader correction across market cap, of course less in Nifty, but of course across market cap, and number of advanced decline was also very sharp in favor of declines. Once a time like that comes, most of the people, their portfolios, their positions, their exposures gets realigned. There are M2M related issues. So once that sets in, it takes a little time for things to then stabilize and then the bull market to resurrect or the advance to resurrect. I would say bull market is intact. It's a correction phase, but the things to restart typically takes a little time.
So it'll take time to restart and reboot that, bull market, which has taken a bit of a pause, if at all. But Amisha, is it the best strategy right now to maybe go towards defensives, go towards large cap quality names and just hide in that?
So I would say that for some time and even now, being with large cap as an exposure little higher than before would definitely help. And within that also, we have, as what I mentioned, some select sectors which we think will do better. And curtailing exposure, but not finishing, just curtailing a bit in mid-cap, small cap would help. But overall, if you see next 3 to 5 year perspective, I think the mid-cap, small cap rally has still many more legs, maybe more selectively than what happened in the past, you can say with more diligence and more judiciousness than what happened in the past. But the fund flow is very strong and it will start giving those legs to the rally again sooner than later.
So essentially what you are appearing to be is cautious in the near term, but on a scale of 1 to 10, not seen you so cautious or defensive in a very long time. So this is a change of stance. Would you also tilt your portfolio in favor of defensives, just to have your position also where exactly what you feel the market could do, more IT, more pharma?
I wouldn't do that because I still see that in the economy, the firepower continues to be reasonably very strong. If you see any key numbers, whether it is automobile numbers, whether it is the air traffic number, whether it is the hotel occupation number, occupancy numbers, many such indicators that you see that the economy continues to show good strength. It is, I think, more to do with the valuations that the correction is set in. And the best part I still feel is that any such rally which got aborted in the past a decade or two was the time when the corporates were also getting over leveraged and they had a lot of debt on the balance sheet. But this time, if you see, the rally is totally equity linked. So most of the corporates with this SME, MSME, micro, small, large, medium, all have bolstered their balance sheet with capital, and that too equity capital. So I don't see that things are going to really stop and it is any kind of a big bubble, but a corrective phase in the markets was overdue to set in and it can remain for a while.
In terms of a trigger, what do you think is going to play out next for the markets? Because we've got the advanced tax deadline, you've got the Paytm issue as well playing out, part of the details already out on the electoral bonds, and come tomorrow we'll have the election dates as well out. You think now the narrative and the focus of the market would largely be split between perhaps elections and earnings?
Yeah, one thing is more important that you will have your March year ending. That always has a little bit of impact on your tax payments, liquidity, and so on. And beyond that, during elections also, a lot of Achar Sahitas will be there in terms of new orders, etc. So that's why combining everything, I think that might be market will go into a consolidation phase. But this cannot really disturb us. And of course, the underlying assumption is that the election results will be positive to the ruling government. Beyond that, if we go, we will have a little bit of monsoon coming in. So maybe just post-election, pre-Diwali is the time when things will start looking very robust again.
Okay, so a bit of a cautious stance coming in that at least for the immediate term, that easy money has been made. It's going to be a lot more difficult. You have to do a lot more bottoms-up approach to make sure that you put your money in the right places. Thanks, Amisha, for that sage advice in this kind of market. That's the verdict for now.